Hi everyone, Joe Vitale, American Retirement Advisors with the Gradient Investments Weekly Talking Points for August 20th, 2021. I apologize for not having it last week. I was out of town. So here we go. We're going to get started. Make sure you see us this week if you're in the Metamora. We're a proud sponsor of the Metamora Days Hot Air Balloon event this Friday and Saturday. It's going to be filled with things to do for the whole entire family. We'd love to see you there. How is that for a commercial? Okay, but we will be there. We're looking forward to seeing you. So let's talk about stocks. Equities were down across the major global indices last week on a depressing military exit from Afghanistan and disappointing economic data, including the prior week's consumer sentiment report. The S&P declined 0.55, the Nasdaq dropped 0.7, and the Russell 2000 fell 2.47. Now, overseas were declined sharper, with the developed markets, which is the EFA, down almost 3%, and the emerging markets dropped 4.61. Now, small caps fell harder than large caps, and by sector, utilities and healthcare were the strongest performers, while energy and materials were the laggards. Now, this week we've already seen it come up a little bit. We're again hitting new highs again, so we're seeing the market react. We've got some unemployment numbers, and we'll talk more about that next week in our next video. But we're starting to see a rebound. We're still seeing a lot of issues in Afghanistan right now, as you know. There's a lot of turmoil out there right now. So international is taking a hit, of course, respectively, and respectively, and you're seeing a lot of things happen. Let's get into fixed income. Bond prices rose as yields fell last week as the benchmark 10-year Treasury declined 3 basis points to 1.26%. The yield curve flattened, however. The 30-year fixed and the 30-year fixed rate mortgage remained at 3.06%, and all eyes are on the Fed meeting this week. So we'll see what happens when the Reserve meets this week. Commodities, copper fell 16% from its 2021 high in May to $4.11 per pound, as investors are becoming nervous about the economy recovery due to the supply constraints. As output in China has weakened, so has the price of this industrial metal. All right, let's talk about economic data. Chinese economic activity grew at a slower rate than expected in July due to heavy floods. Industrial production rose 6.4% year over year, slowing sharply from the 8.3% pace in June, and was much lower than the 7.8% consensus growth estimate. Now, in the U.S., consumer spending dropped 1.1% in July versus June, far more than the 0.2% decline that they were expecting. Now, excluding vehicle sales that have been impacted by supply issues, retail sales were down 0.4%, double the expected drop. A key indicator of U.S. manufacturing growth, which is the Empire State Index, dropped 24.7 to 18.3 in early August. While business activity continues to expand, the rate of growth slowed, driven by lower orders, unemployment, and average workweek growth rates after reporting very strong numbers in July. Let's talk about some company news. Home Depot, which is a G50 and a core select holding, beat expectations for quarterly total sales and earnings, but reported disappointing comparable store sales in the U.S. at 3.4% versus the consensus expectations of 4.9%. And gross margins declined and inventory rose dramatically. Management declined to provide guidance for the second half of the year, and shares were down 0.63% for the week. Lowe's, which is a core select holding, reported sales and earnings that beat expectations, including a 2.2% decline in comparable store sales. Management raised guidance ahead of expectations for the full year to a gain of 30% over pre-pandemic revenues in 2019. Shares rose 9.29% for the week. Synopsys, which is a core select holding, reported revenue and earnings that exceeded consensus expectations and guided full-year results higher than estimates as demand for semiconductor and system designs, as well as security software, continues to rise at a double-digit rate. And shares were up 8.11% for the week. So hopefully that's it for right now. Hopefully we're seeing things start to get back up there. We're very thankful to have you part of the ARA family. Of course, if you have any questions or need to reach out, please give us a call at 855-756-5700 or visit us at aradvisorsinc.com. God bless you. Have a great week. We'll see you in the next video.